Hello and welcome to the Seven Figure Podcast. I'm your host, Thomas Edward, and with me today is Mike Burnick.
Hi, Tom.
How you doing, Mike?
Good. Thanks for having me.
Great. So, Mike, you're the editor of Wealth Watch, Infinite Income, Amplified Income, and more to come.
Wear many hats here.
But you've also been in the industry for a really long time, and this podcast is really to get who we are, put a name to the face, and also explain just what we're about, just in new formats like podcast and video. So tell us a little bit about your background. What got you started?
Sure. Well, I've been in the the investment industry in one form or another for 30 years, just over 30 years now. As a matter of fact, I started out as a stockbroker, but way back in 1988, which you may remember. You're probably too young, Tom, to remember, but that was the year after the big crash where the Dow dropped 22 points in one day in October 1987. And so, everybody was sort of running scared, thinking we were going to go into a recession, stocks would slide lower, maybe another, replay of the 1930s, like a lost decade or something like that. I thought it was a good time to get involved in the stock market because stocks were suddenly a lot cheaper than they had been just the year before. So that's when I got into business. And long story short, ever since then I've been a research analyst, obviously a writer, which I'm doing now for Seven Figures Publishing, trader, money manager, director of research. As a matter of fact, my last post before I came over here was working for a private money management firm. We had several $100 million in assets under management, mostly for high net worth investors and whatnot. And I figured it would be, I spent enough years, making the rich 1% a little richer. So I figured I'd share some of those insights with the general public on this side of the business.
Wow, that's awesome. It's a lot of background. What were some of the first stocks that piqued your interest that you may have lost money or made some money?
Well, I remember back in the 1980s, it was the merger and acquisition boom back then. A lot of companies were merging with each other, financed by Michael Milken's junk bonds. And so, it was pretty easy to make money back then. I remember the R.J. Reynolds takeover when they bought out Nabisco and whatnot. It was, just a good time to be around. There was a lot of deals being made back then. And of course, during the 1980s, technology hit pretty big. I was lucky enough to be kind of an early investor in Cisco Systems. Nice. Most people don't remember, but there was a shakeout between all these networking stocks. Today, Cisco is like the dominant networking company, but there was a shakeout in the late 80s, early 1990s between all these competitors, and the shares got cheap. And I was lucky enough to take a position for me and my clients, and it worked out very well. That taught me a valuable lesson about finding high-quality companies that are selling at a discount, kind of a contrarian investor looking for stocks that are cheap but long-term have great prospects.
Awesome. So Wealth Watch is a free newsletter subscription that we help promote for you, but
right.
It's a kind of entryway to what you're about. Tell us a little bit about that. What are some of the research that you promote in that letter, and what are you covering right now?
Well, we pretty much try to cover the gamut in Wealth Watch. We publish every day of the week. They're just short essays, easy on the market, and we cover stocks, bonds, fixed income, dividend-paying stocks is a specialty of mine as the income analyst for Seven Figures Publishing. So we try to give a little market analysis. Where's the market headed next? Is it still a bull market, or are we getting late cycle headed into a bear market? We cover commodities, like gold, crude oil. We cover, dividend-paying stocks, alternative investments, things like real estate investment trusts, preferred stocks, even some of the energy MLPs, which are all very high-yielding, good income-producing investments that a lot of investors out there just don't seem to know too much about. So awesome. We try to enlighten them a little bit. Great.
Yeah, your portfolio is crushing it this year. So, you mentioned dividend-paying stocks a couple of times. I think. To a lot of our readers or some of our newer customers, they might not know what that is or the risk involved with it. Correct me if I'm wrong, but it's more of a lower risk, very safer investment vehicle in investing.
Yeah, dividend-paying stocks let the investor sleep well at night is kind of the way I like to put it. And a lot of people think it's old-fashioned. Everybody's chasing the latest cloud computing stock these days, or the new artificial intelligence companies that are out there. But there's no substitute for high quality dividend paying stocks like I'm talking about Walmart, Pfizer, Johnson & Johnson. Some of these companies, McDonald's is another one. these companies have been around decades and decades. They've paid uninterrupted dividends, consistently increased those dividends. And you'd be surprised, Tom, about half the total return from the S&P 500 going back over the last 50 years comes from dividends, and especially when you reinvest those dividends in more shares of, say, Johnson & Johnson or Pfizer, you come out way ahead of trying to chase some of the more speculative stocks, if you will.
Awesome. Yeah, that's great. So Wealth Watch, like we mentioned, is a free entry point. What the next step up, I think, is Infinite Income. Right?
Yeah, that's correct. That's a monthly research publication where we dive a little deeper specifically into the income market. So in there we focus on alternatives to traditional fixed income investing. A lot of folks, when they think income, there is no income these days, right? Because Treasury bonds are only yielding 3%, and recently they were even lower than that, around 2%. So what I'm trying to do is get out the word to folks that there's more to income investing than simply investing in bonds, corporate bonds or government bonds. And in fact, I think we're at the cusp of a major bear market in U.S. Treasury bonds. The government has way too much debt out there, number one. So there's a huge supply of bonds out there, and there's shrinking demand because fewer people want to hold long-term 30-year government bonds when the U.S. is running record deficits. When inflation is starting to come back now, as we saw, in some of the recent consumer price data. So what I try to do is alert people to the fact, hey, there's lots of alternatives. Dividend-paying common stocks. There's preferred stocks, which are actually very cheap right now and very attractive. Yields 5-6% range. Wow. There's real estate investment trusts that have been paying uninterrupted dividends for decades or more that are in the 7-8-9% dividend yield range. And then master limited partnerships, which I know sometimes have a bad name because some of them are organized as a partnership, and so you get these strange tax forms you have to file at the year end. But some of these energy MLPs are yielding 8, 9, 10% on an annual basis.
Wow! So
it's worth it to do a couple of extra filings at the end of the year when you file with the IRS for that kind of income potential.
So are these, it varies, right? But are they mostly paid out quarterly, the dividends, or do they vary?
Yeah, some pay quarterly. And, if you have different issues so that the quarterly dividend payments are staggered, you can cover pretty much, every period of the year. Some actually pay out monthly dividends. Some of the leading REITs that I've recommended, in my service, Infinite Income.
Wow, that's awesome. How many, let's say if I was just starting a dividend portfolio, how many stocks would you recommend, not without specifically naming any stocks, is there maybe 10, 15 to kind of get a good risk management?
That's a good diversified basket, Tom. I think right now in our Infinite Income member portfolio, we've got about 12 to 15 stocks, and we're usually adding new ones every month.
Awesome. What's the life cycle, do you think? Are we closing any? Are they more long-term holding positions, or?
Yeah, the good thing about that particular newsletter, it's a monthly newsletter, Infinite Income. So, we're not hyperactive trading, we're just finding good, high quality stocks that are dependable, pay consistent dividends, growing their dividends. And, we recommend about 1 or 2, new stocks every single month. So it is a long-term thing. You can buy it, hold it, cash those dividend checks, and hopefully reinvest some of that income in more positions going forward.
Awesome. So let's back up a little bit. Tell me a little bit about, again, back in your career, you're starting, was there any books or anything that really got you going, or something you would recommend readers that are trying to get up to your level, as they're, listening to everything you're saying?
Yeah, well, I've read just about everything I could on Warren Buffett, and anything I could get my hands on. And in fact, Warren Buffett has his own book out there, which I don't know if any people know that, or many people know that. He didn't actually write it himself, but he sort of did write it because it's a compilation that came out over a decade ago now, of all his essays to shareholders of Berkshire Hathaway over the years. And it's all, bound together into one book. And I'll tell you, Tom, you talk about a wealth of wisdom, that would be a good place to start.
Wow.
Also, any of the books from Peter Lynch, the famous Fidelity Magellan fund manager from the 1980s, that's a great primer to get started with, and familiarize yourself with the market and how important dividend income is in your overall investment framework for your total returns.
Wow, that's amazing. I'm gonna have to check some of those out. What are the? Sorry. How would you say, so you read these books to stay on the cutting edge of the market, keep up, and what would you say is something that's coming that we may have not talked about today? Do you have anything coming out in the next 3 months, or anything you're researching right now that sounds interesting?
In terms of new themes or investment ideas?
Yes.
Well, one thing that's really piqued my interest recently is, we mentioned it before, Tom, is inflation. It's definitely kind of creeping back. It's been, non-existent for the longest time. And so when that happens in markets, usually people forget all about it, right? It's the bullet that you never hear or see coming that ends up getting you, right? So inflation is a problem that we haven't had since the 1970s, right? So nobody is looking for inflation to be a problem. Nobody's really paying attention. And consequently, we see in the data, the consumer price index, producer price index is moving up. And, as well as I do, Tom, that those government data series don't capture the true rate of inflation.
Right.
I mean, look at what's going on with college tuition. If you've got kids you're saving for, it's staggering. Look at the rising cost of healthcare. It's just skyrocketing.
Right.
So the real inflation is definitely heating up more than the government says. And when that happens, some of the best things to own are natural resource companies, Tom. Companies that invest in mining, gold and silver mining stocks, companies that do copper mining, lithium, which is huge now, because that's a key component for the batteries they're putting in all these electric cars that most automakers are working on. And all those resources are fairly cheap right now over the last few years. So now is a good time actually to be looking at select companies in the natural resource sector because they're inflation proof. If inflation really does catch fire in the years ahead, these stocks are going to skyrocket.
Right. How about cobalt too? I've been hearing a lot about cobalt with electric cars, right?
That's another one. Even copper, it's an interesting stat. People think, oh, copper's old fashioned, pipes and houses. Actually, there's more copper that's used in the average electric vehicle than there is any other element because of all the wiring that conducts the electricity to the wheels and, throughout the automobile. So copper prices are pretty cheap right now, and they're going to shoot higher as well.
Wow. Yeah, so in addition to the research and the newsletters you do, you just recently wrote a book.
That's right.
Right, can you tell me a little bit about that? That's
exciting. It's called the Little Black Book of Income Secrets, and basically we go through pretty much the same presentation that we do every month for our Infinite Income members and readers, where we talk about alternatives to your fixed income portfolio. It's not just about bonds. If you're just going to rely on bonds or traditional fixed income investments, you're going to end up coming up short as inflation accelerates, as bonds sell off going forward because there's too much debt around. So you've got to look at other alternatives, like I said, dividend paying stocks, preferred stocks, and some of the other high income producing investments. And every chapter in that book talks about a different alternative. Also some pretty unusual, sort of off the wall things that you can do just to earn money in your spare time that would surprise you.
Wow. Yeah, that's awesome. There's a couple little nuggets in there that I pulled out. Really recently got a couple $100, like unclaimed taxes from 3 years ago that had a correction. There's a website. You just type in your name, pulls up any unclaimed money that the government may be hanging on for you. I even typed in a couple of my friends' names just to check, like my parents, and there was stuff there too, and I told them about it, and they were like, oh wow. It's
amazing. It takes 30 seconds of work, but most people don't even know that this website exists, so that's why I highlighted it in my book. It all adds up, Tom. Every penny or dime you can get, especially from the government.
Yeah. Wow, that's great. Cool. So, is there anything else before we wrap up? I think that was an awesome amount of information so far. But anything else you want to say to your subscribers or potential prospects? Yeah, we just tell anybody out there that's serious about investing and safeguarding their investments going forward. I mean, we've seen a lot of volatility creeping back into the markets this year, right? Yeah. I mean, stocks were on automatic pilot, it seems like, to the upside, 2016, 2017. This year, we've already had two 10% corrections, one in January and one again here in October. And who knows where we're going forward. There's trade war worries, there's concerns about the Fed aggressively raising interest rates, of course, inflation, which I mentioned. So there's a lot of tricky cross currents out there, and I think people need to be on the ball, do their homework, check out some of these alternative investment strategies to produce stable income in this treacherous environment. Wow, awesome, Mike. That's great. If you want to learn more about Mike Burnick, please check out Wealth Watch. That's at sevenfigurepublishing.com. Mike, thanks for joining me today. Thank you, Tom. Appreciate it.